Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish long white Mariposa and second bullish white soldier on Friday after the previous session's bullish engulfing pattern and bullish opening long white Mariposa. Prices continue to move higher, up and away from the base formed from the combination of the July 2017 to November 2018 head and shoulders neckline, currently at 109.40, along with the close by 50% Fibonacci line of the January 21 to September 22 move at 109.44. The market once again moved up through the crucial September 2024 high at 112.13 and the pink May 2011 to date downtrend currently at 112.35, as well as through this time the July 23 high at 112.76 and the June 2020 high at 114.20, and finally getting capped by the bright red neckline extension to the August to September 2020 head and shoulders top, currently at 114.70. Prices then pulled back to close between the July 23 high and the June 20 high. It was the highest high and high close since February 2022. As I already said last week, we're set up already with just 4 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we're beyond. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up for one. Overhead, beyond the bright red neckline extension, we have the small congestion area at 114.82 to 114.95, containing the February 22 high at 114.95, and beyond that a slightly wider band between 115.70 to 116.02, containing November 2020 low at 116.02. And so far today, a lower open, a drop down to support the July 23 high before a move back up to the June 20 high, from where we've backed off from just a little. Cable, AK sterling against the US dollar. A bullish opening white Mariposa and fourth bullish white soldier on Friday after the recent bullish Harami and bullish opening white Mariposa. Prices pushed higher over and out of the congestion overhead between approximately 128.50 and 130.14 and up to the smaller congestion band between 131.33 to 131.44, made up of the December 2020 low and July 23 high respectively. This was enough to cap the rise, with prices turning lower to close a little over the November 2024 high at 130.47. Okay, so I recently asked you to continue keep an eye overhead at the September 2024 high at 134.34. I would still ask you to keep an eye overhead as you see the prices. If prices exceed that level, then we would have set up the conditions for this market to make that rarest of patterns a possible annual key reversal pattern. This pattern has already happened in Euro-dollar, but not yet here. However, we still have a few significant resistances ahead of that, some of which I've already mentioned. But I'd also like to add to these the purple neckline at 132.51, with the small mid-November to early December 2024 reverse head and shoulders continuation pattern. Now this one capped the market 2 weeks ago. Then the Fibonacci and market high base congestion area between 132.46 to 132.98. That includes just outside it the bright red 2021 to date downtrend, currently at 133.01, before we reach the September 2024 high. Now, there has been a question raised as to whether the whole March to date action is perhaps a bullish halfway hesitation. This question is open, and right now I'd have my doubts about it. Because if it did happen, it would be a very, very sloppy one. But it's still a question out there. Now, so far today, a dip towards November last year's highs, but a pull back up before testing it properly. And prices have punched up through the overhead combined congestion of December 2020 low at 131.33 and the July 23 high at 131.44 and towards last week's high at 132.07. US dollar against the Japanese yen. A second bearish black crow pattern on Friday, also a possible hammer pattern as well. Prices were capped by the overhead 50% Fibonacci line of the January 23 to July 24 move at 144.58 and dipped down below the broken pink upper trend line, currently at 142.95 of the well-highlighted early February to late March descending wedge pattern, though they did not stay there, closing just above it. Further down we have the August 2024 low at 141.66, then the pink lower trend line currently at 141.40, then the dark blue neckline extension for the August to October 24 reverse head and shoulders bottom before we reach this significant 38.2% Fibonacci line, the January 23 to July 24 move at 140.48. Now, though pierced, this 38.2% Fibonacci line held up the market back in September of last year on a closing basis. Overall, the market remains within the larger, big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork, with the bright red upper time above, currently at 150.01, and the middle time below, currently at 134.72. Now, this pitchfork shows the bearish angle of attack of this market. Now, so far today, a higher open, but no real attempt at the overhead 50% Fibonacci line at 144.58 before a move lower down towards Friday's low, though we've pulled back up as well to the old broken pink upper trend line at the moment. US dollar against the CNH, the offshore Chinese yuan. A bearish closing black Marubozu and third bearish black crow on Friday, and a continuing follow-on lower to last week's two-day pipe top pattern. Prices were momentarily tempted topside towards a congestion between 734.41 to 734.96, but turned lower before testing it, pushing back down through the July 2024 high at 731.13, as well as below the bright green lower time currently at 729.44, the mauve medium moving average currently 728.69, and finally stopping just ahead of the green short medium moving average currently 727.56. Now I'll discuss this bright green lower time now. So I recently drew a pair of pitchforks for the same move. Now it's something I do not usually like doing, as I prefer one or the other. Nevertheless, we have a bright green lower time currently at 729.44 for the bullish Andrews pitchfork, whilst a little lower down we have the purple lower time currently at 726.26 for the shallowy bullish shift pitchfork. Both of these pitchfork patterns offer the same action, the late September 24 to mid-March 25 move. Previously I stated that I favour the bright green bullish Andrews pitchfork to show the bullish angle of attack. For the moment I'll still stay with that idea. Now so far today, a move up from the open over the bright green lower time and mauve medium moving average, but capped so far just about by the July 2024 high. US dollar against the Brazilian real. An indecisive spinning top here on Friday with some aspirations to be a bearish dark cloud cover, but none of that really materialized. Prices were capped by the flatlining medium moving average, currently at 591.07, and supported for a third consecutive session by the October 2020 high at 580.70. Further up we have the recent 50% Fibonacci line at 595.21 of the December 24 to early April 25 move, whilst below we have the flatlining green short medium moving average, currently 577.68, and the gold very slowly rising long moving average, currently 575.92. That is just over the December 2021 high at 575.78. Overall, I'd recently drawn a pair of bullish Andrews pitchforks, bullish patterns here for the same action, the mid-August 24 to very early April 25 move, something I do not like doing. You see, I'm either an either or type person in this regard, but I'm not sure which one works best just yet. So I have a dark blue bullish Andrews pitchfork for prices in between the overhead middle time, currently at 616 even, and the lower time below, currently 562.15, and a bright red bullish shallower shift pitchfork for prices in between the overhead middle time, currently at 601.53, and the lower time below, currently at 560.12. There's also one key outstanding feature that's still in development. We are set up now for a possible monthly key reversal here. Thus, if we close on Wednesday the 30th of April either over 588.52 or under 584.10, then we'll be on. Anything in between have a lesser outside month pattern. US dollar against the Mexican peso. A counter to the counter bearish dark cloud cover pattern on Friday after the previous session's immediate countering bullish Harami and bullish opening white Marubozu. Prices were capped by the September 22 high at 2057.65, a very significant level as it's the center of a congestion area stretching roughly between 2017.20 up to around the 2083 even area. And prices dropped down through the close together flatlining mauve medium moving average, currently at 2036.83, and the green short medium moving average, currently 2034.64, as well as the old bright red lower bull channel line, currently 2040.82 of the very gently rising early November to early November 24 to early March 25 broken lower bull channel line, halting just ahead of the October 22 high at 2017.20. Further up, we have the 50% Fibonacci, the April 20 to April 24 move at 2099.90, and the bright red upper bull channel line currently at 21.12.42, plus the July 22 high at 20.05.01. Meanwhile, below, we have the significant congestion zone between 1987.96 and 1991.31, reinforced from below by the rising gold long moving average, currently at 1989.38. All this has set up the conditions for April to possibly become a monthly key reversal. Thus, if we close on Wednesday the 30th of April either over 2053.10 or under 2045.80, then we're beyond. Anything in between would have a lesser outside month pattern. Now, so far today, a move down right from the open, but constricted from heading further down by the October 22 high that's below. Overall, the market continues to find it a little tougher going in either direction through the congestion stretching from roughly 2017.20, possibly even as low as 2004.45, up to around the 2083 even area.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.